Well, welcome back, everyone. This market continues to delight and surprise. Well, not quite as much today. Let's take a quick look at where we ended the day today. That's the market, the S&P 500 ETF, the SPY, traversing that two standard deviation channel, going back to the bottom of the market back in October of 2022. We've come right back up into the uppermost quadrant of this four-quadrant channel, and we know when we're in that territory, it's either perform or start to roll over. We can get a consolidation pattern sideways, kind of like we did over here, which then turns into a topping pattern. We can get a consolidation pattern like we did right over here and get ready to then continue. Which of the two is more likely, or do we see a different path as we move through this week? Well, back into this week is Powell coming to the table telling us that we are likely to see the dollar devalued. The market is already pricing that in. CPI data from other nations are also shoving that US dollar down, and the equity market has already priced a good chunk of that in, if not all. Today's pause, indecision at the hard right edge, must now be evaluated for, can this party continue, or do we have tools that tell us it needs simply a refueling before a continuation? Now, let's go in. The trend is still our friend until the bend at the end, as you hear Rob say quite frequently. You've got three charts on screen. The time frame is the same for each. They represent the SPY, the Qs, and the Russell 2000. Now, you might remember from the Sunday video where Rob and I were talking about the idea of a divergence, but a setup. If the Russell breaks out, there's a chance for a bigger move. Well, we had that happen yesterday. The SPY did make that bigger move. The NASDAQ did yesterday as well on the breakout from the Russell. But today, we've come back to back test the breakout area on the Russell. The Qs are in a pause after making a slightly higher high for this trend. Same with the SPY. If you look at all of the tools on screen, I'm going to highlight that we are in stage 3 of the Champion Trend Pack sequence of signals with the 5 big indications in the exclusive tools to wealth charts. You can't get them anywhere else. Those tools work in concert with each other, and they have a sequence, and that sequence is now in its final stage, where it can become very exciting. Breakout forecaster 1, breakout forecaster 2, we are in a bullish breakout, it literally tells you, and that means we can make bigger price moves with less bars. The NASDAQ's not following suit. We're not in that same spot, and that's a bit of a concern. The Russell is not in that spot either. Now, tomorrow and Thursday are really the testing days, but we're going to be hearing from Powell at the Jackson Hole Symposium, where he may hint at how the dollar and policy for devaluation of it to pay back the debt can actually service the debt, let alone pay it back. But the idea simply would be, if he hints at something the market has not already digested, well, the current move down on the dollar would be exacerbated. But think about the adage: buy the rumor, sell the news. Well, that's what's been happening. If you look at the dollar, gold, and long duration treasuries, which benefit from a weaker dollar, lower yields, so does gold. The dollar's come down. It's in a bearish breakout, very, very much polar opposite to the SPY. Gold has come out, but it's slowed down. And we've, of course, got a retrace back up on TLT, the face value of the bonds, doing better as yields are down. How is this related to the market move and the fact that we don't have all of the signals I typically need to see on the NASDAQ to join the S&P and give us that robust sense of up, and away? Well, more than sense, the probability. At this stage, we are seeing some of the jet fuel that's been used to get us up here starting to run dry. There's still enough available on the Russell to take us a little further up, but remember, we are still in a sell signal zone according to the Champion Trend. We're trying to work our way out of it, so we need a lot more of that glow to rub off from the NASDAQ and the SPY, and as it sits right now, stage 3 of the sequence should be the most exciting, and over the next couple of days, The flight path could take the turn of back test, just like the Russell did today, back test the breakout forecasters, and then being refueled, rip up on incrementally bullish news from Powell. The alternative at this stage is to look for a market that has a very, very difficult time actually making it any further. Now that is possible. It's not the most probable outcome. When we're in the uppermost quadrant of channels like these statistical channels tell us that buying can beget buying, and if we get an abrupt pause, we must hold support areas, kind of like we did right before we made the all-time highs. My view is that the market needs a small pullback to recharge, refuel, rejuvenate, and then rush up to make higher highs. What I don't know is the future, and I don't know whether those highs are sustainable. Most of our tools would tell us negatively divergent higher highs are the only way that we can get up to new all-time highs, and that means a short stint up there. A completion of this move that we're in, rather than a robust uptrend that carries all the way through the end of August into the beginning of September. September's a volatile month. August and the Jackson Hole Symposium should prove to be a monumental event to shape policy for central banks globally. And as it sits right now, I see a market that has a better chance to make higher highs this week, potentially prior to that, a pullback, and then off we go. The most important thing is risk management and saving oneself from the pain of a mistake. Price action below that first breakout forecaster, warning, and already a drop that's significant. Price action below the SPY's second breakout forecaster, which is sitting down over here at 548, is, for me, finality of this move. Stay safe out there, folks. We'll see you in videos just like these in the days to come. This market is still quite live and quite wild as we move towards Labor Day. Have a wonderful rest of your day. Bye for now.